Hello traders, Day Trader Matt here of businesswithtrading.com, and today I wanted to talk about a Euro futures swing trade that we took. And we took this yesterday morning, right about here, and we took it as a breakout trade. And we have a couple different trades that we look at. One's breakout, the other one is a pullback, and the other one is sideways. So those are our three main trades that we look at. A breakout trade is awesome because whenever price does break out of a certain level, the stop is relatively minimal. And because of that, the upside potential is just enormous. And that's what I'm going to show today in this trade. So we were looking at the euro dollar futures, and this was what we were looking at on the larger time frame. And any breakout from this level, we were going to take. And we had already spoken about it. This was about 8:30 the day before yesterday. And yesterday came up, and we were looking, if price does break this level, we're taking a very tight risk trade. And that's exactly what we did. So we took the 123.74, and our stop was 4 pips below, which was $50 per contract. I'll say that again, $50 per contract. That's insane. And these trades like this with this tight of risk are very far and few and far between. That would be the better way of saying it. So being able to take that trade with that low amount of risk is just awesome. So the trade breaks out. We had our stop down here. Would have been right here actually. Would have been about right here, our stop. So 4 pips. Price broke out, and it ran up a little bit, came back, ran up, and started to chop around a little bit. Chop, 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 chop. And then closed here, opened up here. Chop, 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 chop. Chop, chop, chop to the downside. Chop, chop, chop to the upside. And then, boom, it hits our first target. Very nice. As price did come up here, once it got up here, we did move our stop up a little bit, just so that way the only thing that could happen was we could make money. If price came up here and just went sideways, then we would have just exited the trade that day. It really wouldn't make sense if it just went straight sideways from here, but it came up here, and that gave us a little bit of a cushion. We were able to move our stop up, and that's really what we want, to be able to get into a potential longer term trade. Now, our view of the markets, we were thinking the markets were going to go lower, which would ultimately make the US dollar go higher, and that's assuming that correlation is there, because correlations come and go. So the US dollar can go up with the US markets. The US dollar can go up as the US markets go down. Everything's correlated in some form or fashion, but it's not always like a 1-to-1 or a negative 1-to-1. The correlations are always going to be a little bit different, but just keeping that in mind. And that is something that went through my mind, obviously. So we got into the trade. It came up. It was nice. We were able to take our first profit up here, which was at 124.48, which was $925. I should probably be writing this stuff on the charts. So this was our risk right here, which was $50 per contract. And if you guys enjoy me writing this stuff on the chart, even though it's so sloppy, it's hard to read, but I think it's still relevant, then this area up to here was our first target. I'm just going to write first. And it was $9.25 per contract. Remember, we were risking $50, so that's pretty phenomenal. multiple reward versus our risk. And as price came up, took us out. The U.S. market opened right around here. Price started chopping around. We decided to move up our stop. So if it did take out this low, we were just going to get out. That's what made sense to me. And we did. It came down. We got out. And then it came up and just went sideways. It really does look like crap here. It does not look good. And I don't want to be in it. If price is not looking very good, you don't have to get in it. We didn't have to get in down here. We didn't have to short this. And we didn't. We didn't get in down here, and we didn't short this. Because if price is not looking good, there's no reason to really be in the trade. And I know we talk about this all the time, but it's important. So exiting here, if we take our entry to where our second exit was, I'll put it 2 and D there, and it was 124.05 or $387.50 per contract. So if you took 2 contracts, you would have been risking $100, making a little over $1,300 and something. If you were doing 4 contracts, 5 contracts, 10 contracts, you would have been doing even better. With Euro futures, yeah, you could trade 50 contracts. It's going to depend on the time of market, but at this time, Europe's open, Europe's going strong. The U.S. would have opened over here. Excuse me. The U.S. would have opened over here, and it just kind of chops around. Europe, it's escaping me right now when their open is, but like around, I think noontime is when they close. That gives you an idea. So, Europe's up and going strong. This is the Euro dollar futures. Of course, they're going to be the largest Euro dollar contract buyers and or sellers. So this was a nice quick trade. It happened in less than about a day, and you were able to take out a little over $1,300 if you were trading 2 contracts. And we always teach a multiple contract system. That's what I look at. I believe you can maintain smaller risk if you trade multiple contracts versus just trading 1 contract. Obviously, if you're swing trading, you can trade 1 contract. Day trading, it's a little bit more difficult to keep your risk in tune if you're only trading 1. So I always teach multiple contracts. That's how I trade. That's how I teach others to trade. I feel that, if you're doing it, why not teach what you do? There's really no reason to teach something else if you don't trade that way. It makes no sense. There are people out there doing it, and it is what it is. Probably going to make a video about something like that in the future, but it has nothing to do with today's video, so I'm not going to talk about it. I just wanted to highlight this trade. It was a nice quick trade. Again, the high at 8:30, so we probably sent it out around 9 or 9:30 whenever price started to just chop around here, and then as it started to come down, so we may have sent this out around 10, 9:30, 10. It's probably when we sent it out. Price did keep chopping around, and then when it finally did break up, it actually was a very nice trade. And having a 4 pip stop, you're risking $50. It's not really that big of a thing. Even if you're trading 20 contracts, that's still not that bad. That's $1,000. So whenever you get a trade like this, it's important to know that they don't come around very often. And when they do, they're just really, really help build accounts. That's what these are for. And that's why I teach, keeping risks small, being able to be consistently profitable, because if you're consistently profitable, meaning you're not down anything, so my account was not down anything. So when I took this trade, took my money off here, it really just built my account. I mean, you're talking multiples, and it's really just very, very nice. Very, very nice to see. And that's over 20 to 1. That's just incredible. So, hopefully you enjoyed today's video. You got something out of my rant. If so, if you have any questions, comments, feel free to leave them below. You can also email me directly, support@abusinesswithtrading.com. If you go to the website, contact form on the upper right, under, I think it's the About button right underneath that, contact form, you can reach me that way as well. With that, thanks for watching. Hopefully your night is awesome and you enjoy the rest of your trading week. I'll see you back here in the markets. Thank you.